JJ the CPA here. Hope you're doing well. Hey, headed to my son's baseball game. Thought I'd make use of this time to talk about the EIDL now that PPP is over. So when you're talking about the interaction of PPP and EIDL, well, if you've spent all your PPP, then you don't have to worry about it, of course. But if you have both, really the strategy is spend your PPP money and then your EIDL. So how do you know that that's happening? Well, quite frankly, if you got, 15 grand of PPP and you got 25,000 of EIDL and they're both sitting in the account, well, basically you can just tell yourself that the first monies that you're spending is PPP and the second amount of money coming out of your bank account's EIDL. You can go so far as having separate bank accounts if you'd like, but once PPP is done and spent, I don't see a purpose in it, because the EIDL, there is no time frame. There is no got to spend it within 8 weeks or 24 weeks. The EIDL can be over any period of time. The EIDL is for ongoing expenses. So for me, just if you're going to put it in operating, it's there to cover ongoing expenses. I've got a number of videos talking about, what are the uses available to you for the EIDL. And basically, if it's not an ongoing expense, recurring, something that's happening often, monthly, quarterly, maybe it's an annual due, okay, that's your ongoing expenses. Believe it or not, if you have business loans, you can use EIDL funds to pay your monthly payment. It has to be business loans. So you can't refinance a loan. That's not an ongoing expense. You can't pay yourself back money that maybe you've put into your business account. That's not an ongoing expense. You can't go buy a car or a significant asset. That's not an ongoing expense. Now, I think there's a sense of reasonableness. If you need a $15 calculator or 10 key, if you're needing a $450 laptop, the thing I would tell you on that is that the only way that that's going to cause a problem for you to go ahead and buy those things is if you have no money in your business account, meaning you're dry, you don't have a penny, you're not bringing in a dime, and you now have EIDL money in there. That's it. All you've got is EIDL money. Well, then, yeah, you can't buy, technically, a calculator or a 10 key or a computer, right? Because those are, you could say, are assets. You can argue that they're an expense item, but then we're just getting silly here. So the point is that if you're going to buy an asset, if you're going to pay off a loan, if you're going to pay yourself back, and you have enough of your own money in your business account to do that, then I would assume that's fine. From the standpoint of you're using your own money. And then as you're collecting funds from your sales or services, you're collecting, revenue. If you have EIDL paying other expenses, then the way I see it is that your bank account is increasing in the funds available for the use that you see fit. But I'm telling you, on the EIDL, other than the things that I told you, and also you can't do any major repairs because it's not an ongoing expense, should be really easy. And I know that there's some that have indicated that having the EIDL is really stressing them out, and I don't see how. And the only reason I say that is that don't let it. It's this simple. Put it in your business account and don't do those few things that I just indicated, and you're good to go. So it can cover payroll if you're done with your PPP, right? It can cover employer payroll taxes. It can cover work comp insurance. It can cover health insurance and rent and CAM and maintenance, all business, okay? All business. And if you don't have a ton of that every single month, well, then your EIDL is going to last you a long time to cover your ongoing expenses. So whether it's the EIDL or the EIDG, which is the grant, And whether it's the express loan, which is up to $25,000, or the $250,000, or the $1 million, it all has the same requirements. It all has the same limitations. And then when you're booking that, you know, in your QuickBooks, let's just assume that's the most commonly used, then when that money comes into your account, you're going to set up a new account, and it's a long-term liability account, and it's called EIDL. And that money's going to park in your bank account, and then when you're selecting the account that it goes to, it's to a loan. And there won't be any payments for 12 months, so it's just going to sit there idle. And then when you start making payments on it, you're going to break out the payment, the dollar amount leaving your bank account between principal and interest. And if you're keeping a balance sheet instead of financials and you're doing QuickBooks, then you're going to do a split of that payment to allocate the amount going to principal, which will offset this loan that you set up on your books, this long-term liability. And then also there'll be a portion that's to interest expense. So this doesn't lead to any of the expenses that you're spending with EIDL to be non-deductible. It's just a loan like anything else. Now, if you're doing the EIDG, the grant, then if you've gotten that amount, then I would record it as the current liability, because it's a liability the second you get it, as in you have to spend it accordingly. And then once you spend those dollars, there's two ways you can go about it. You can either record those expenses you're using the grant money with to offset the liability. So this would be not a transfer from one bank account to another. This would be, you know that you're spending EIDL, scratch that, EIDG, the grant money, to make a payment for something. So instead of putting that expense to an expense account, you would select the account which is the grant or the current liability, because you need to reduce down that liability, which is you're required to use it or only to use it for ongoing expenses. So that's how you offset it. Another thought process is that you still record all your expenses to expenses. And then the way I'm doing it with my clients is at year end, I'm going to do a journal entry, and I'm going to debit the liability, and I'm going to credit the expenses, because it's not income, but it is a reduction of the expenses that you spent it on. It accomplishes the same thing either way you go. So at the end of the day, here's a recap of everything related to EIDL, EIDG, and then if you haven't applied for it, if you need it, you go to SBA.gov, go to the yellow strip at the top, click it, COVID loan, and fill out the information. I've got a playlist for the EIDL. I've got a video that walks you through specifically also for the self-employed on filling out the application. You don't get to apply for a certain dollar amount, and when you're applying, you check a box to say you would like to be considered for the grant, and then you'll wait and see what happens, and you get to make a decision if you want to accept whatever loan amount they are offering. You get to make a decision of denying any of it if you're not happy with the amount or whatever the case is. Then just note that if you get the loan, it doesn't mean you get the grant. If you get the grant, it doesn't mean you get the loan. And if you're self-employed, it seems as lately